For the Dogecoin price to skyrocket, we need a catalyst. Well, my friends, could this be the catalyst? The Astrobotic moon mission, where they're going to be sending Dogecoin to the moon with a rocket. And if this mission goes ahead as planned, what is it going to do to the price chart? Because we've been tracking Doge and we've been tracking Doge. And one thing that we said was a positive was this long break of the diagonal trend. It's been going down for the whole of the crypto winter, and we've managed to pop our head up. We're at a key level of resistance, and we said we expected price to react at this level. That level is between 10 and 10.5 cents. So that's a tick. We expected resistance at this level, and then we needed to monitor the pullback. How far is price likely to pull back to? Because we've got our trend line built in. This is our momentum line. Once this momentum line is broken to the downside, you can expect price to start moving downwards. So this is the importance of protecting yourself, and this is why we've built in these key levels. The key levels that we built in from the previous video is just under 9 cents and 7.5 cents. So these are the areas we're looking at, and if broken, we need to reassess and then realize that price is starting to reverse. So we've poked our head up. That's a positive. We're waiting for a pullback. The key area that I'm expecting to pull back is going to coincide with the just under 9 cent level, which is 0.8724. So what we can do is we can stick a quick Fibonacci tool from the previous low to the high to find out how far price is retraced and how far price is likely to retrace. So we've come back, we've kissed the 382. And one thing to note, as we've kissed the 382, following this resistance pullback, the stochastics pullback, we're now in an oversold territory. So that's a tick. So what we can do is jump into the lower time frame on Dogecoin and then stick in our momentum line. Simple. Trading doesn't have to be difficult. Trading can be easy. Trading can be fun. So stick in our momentum line, and we know once that's broken, the bulls are regaining momentum and we can start testing for new highs. So keep monitoring that down. The potential is that you could actually pull back to the 618 level. So the 618 level and the 0.5 level, if we just build a zone in here, and then we can give you a price on this pullback zone. So this zone starts at 8.5 cents and top of the range just under 9 cents. So what we'll do is we'll just get rid of the Fibonacci, give us a clearer picture, and we know exactly where our buy zones are. So none of this is financial advice, but if you're looking for a pullback, you're looking for the stochastic to come back into overbought and then another move to the upside. Before we get that move to the upside, we need the break, momentum, and then retest this previous high. Once we've broken this previous high, then you can start seeing the surge. But look, guys, this is a daily chart. So what's happening here? Each one of these is a day. Are we going to get a few more days of a pullback before we get the break? And then the big news by Astrobotic is going to send Doge to the actual moon. And this is what we need to be prepared for, because Doge hasn't run in comparison with the rest of the altcoins. So as we're tracking this down and waiting for the break, if we do get this break and it does coincide with the news, then you could see that price surge. So we're looking for the price surge. And if, guys, this does go ahead, if the moon launch goes ahead, it could well be a case of buying the rumor and then after the launch, selling the news. So that's something that you need to be careful for. And that's why, as you're starting to ladder up your position and pulling back, you're putting your stop loss up and you're putting your stop loss up and you're putting your stop loss up. That's called a trailing stop loss, my friends. If you want to know more about a trailing stop loss and how that can protect you, let me know and I'll do a video on that for you. But this is the key. This is the key point is once you've made a new high, you've pulled back, you've made that higher low, you put your stops below the higher low, and all of this is profit. That's locked in. You get a move to the upside. If this doesn't pull back and stop you out, you put your stops below the previous low, and then another moves to the upside, and you keep building and building and building your position. So when the market ultimately reverses, that's what happens. You get stopped out in profits. You can reassess and you can look at getting lower levels with your profits. So that's the importance of trailing stops, guys. If you do want to see how I use my stochastic RSI, it's the most simple tool that you can use in trading. Check out this video because I go through step by step how you can use this as a gauge of sentiment. Is the market overbought? Is the market oversold? When should you enter? When should you exit? So check out this video if you want to hear more about that.